I've always wondered myself, why do we have to hear this every night, what the stock market is doing?
70 record closing highs so far for the Dow.
Blasting through a ceiling.
In a record-setting IPO.
Investors who have been riding the wave.
When the stock market is booming, we're made to believe the economy is booming.
Today on the New York Stock Exchange, where it seemed the bell was tolling for stock prices. This was the scene on the big board within just a few seconds. The Dow down a whopping 9.71%, and it kept on plunging. Trading on the S&P 500 was suspended after a 9% fall.
Stock market, share market, equity market. What is this? Some people say it's the world where people make money. Many say stock markets are dangerous, stay away from it. People lose money there. Actually, what is happening in the world of stock market? How many of you have ever wondered about what the stock market is? Hi everybody, I'm Bhavya Neeraj. Welcome to the Delight of Wisdom. This episode is solely for those curious ones who want to comprehend the concept of stock market. For that, please try to visualize a very simple business like Hima's chocolate manufacturing company. Hima is running her chocolate business extremely well. After making an outstanding profit from it, she is planning to diversify her business. For that, she needs to raise capital. But she knows borrowing money from a bank is perilous. So, Hima decided to go public, giving anyone interested a chance to own a part of her business by investing in it through an initial public offering, aka IPO. Initial public offerings aid corporations approach potential investors for capital to fund their expansion plans. Here, interested investors pay a certain amount to own a small part of Hima's chocolate manufacturing company. Thus, by selling the shares, she expanded her enterprise. Hima can utilize the money she raised for opening new chocolate shops. Her sales skyrocketed, which means more profit. She can use some of the profits she generated for developing new products. Say Hima ice creams. She can also contribute some of that money back to her investors as dividends. Dividends are payments made by companies as a reward to shareholders for putting their money into the venture. It helps investors to get thrilled about the business and are very likely to invest more. According to Benjamin Graham, who is known as the father of value investing, if you are buying a stock, then you are buying a piece of business. When you buy shares of a company, you are partnering with the management of the company. You can become the owner of that company and can participate in its growth. Be neither the boss nor employee, but the owner to own the trains and have someone else ensure they run on time. Thus, the stock market provides opportunities to those who have excellent business ideas to own businesses. For instance, investors like Bhaskar. He has got remarkable entrepreneur ideas like Hima, but due to some troubles couldn't able to execute it. Now, through stock market participation, he gets an opportunity to accomplish his dreams by investing in her business. He thinks Hima is clever and her business is going to be gigantic. So, Bhaskar decided to invest in Hima's business. He bought some shares from one of the shareholders for twofold the amount she paid for them, anticipating that he can sell these shares for more profits in the future. That is, if you let the public participate in your business by buying its stakes, you can grow your business empire immensely. From the investor's point of view, the potentiality of subsequent earnings in the form of dividends and profits encourages them to invest more in risky new ideas. Moreover, it will attract fresh investors. The lure of becoming rich is irresistible, right? And from the entrepreneur's perspective, it drives them to make excellent decisions. So they have plenty of money to pay back to their shareholders. Furthermore, they can expand their business empire and create new jobs which boost the company's overall market value. This is the whole idea of the stock market. This will attribute to the economic growth of a nation. Thereby, an affluent society is formed. However, the opposite can happen too. Stock markets are made based on varied opinions of their participants, whose decisions are based upon the prevailing sentiments in the environment, such as fluctuations in material prices, black swan events, changes in technology and government policies, etc. Sometimes the market crowd exhibit greed and sometimes fear. The greed and fear cycle make the stock prices volatile and investors get trapped in such volatility to lose fortunes. If you want to dig deep into the peculiarities of market and its fluctuations and want to survive in the long run, this wonderful book by Parag Parikh on value investing will give you valuable insight. So, to cut a long story short, stock markets, equity markets or share markets are venues where buyers and sellers meet to exchange equity shares of public corporations. They are crucial components of a free market economy. Remember, when the markets thrive, the economy flourishes. Hope you got the idea of the stock market. If you are interested in videos like this, please subscribe to the channel. Let's learn and grow together.